The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Welcome to the Main Street Code for Financial Success. It's a beautiful day today here on Long Island. When we talk about our code, we talk about choice, organization, direction, and education. And we work with hundreds of advisors across the United States, whether it be insurance brokers, attorneys, CPAs. They all reach out to us for insurance advice. As a matter of fact, last week, or actually this week, I was in Raleigh, North Carolina for a national convention specializing in long-term care. I was a presenter at two different things talking about long-term care insurance and long-term care options for when people need care in front of a national audience. And what was very interesting and very revealing to me, and something that I've always known, and what you need to know, is I'm licensed in every state in the country. And you may or may not know this, but your brother, your sister, your uncle, your mother, who may live in another state, may have different products and things that we have here in New York. New York has a very much separate product offering than the rest of the country, and that's for various reasons. But know that you need to speak to an expert in every area, or if you're moving to an area and you need somebody to help you with insurance decisions, or if you have a relative in an area that has a certain insurance program that you're interested in, please reach out to us. You can always call me at 631-647-4694. We are experts in all areas, all across the country, specializing in life insurance, long-term care, disability, fixed annuities, and many other financial planning topics. For the last 3 weeks, we've been talking about inflation, and it's still going on and still out there. And we're talking about interest rates, and the Fed has made an interest rate increase, and inflation continues to go up, and we anticipate for the rest of the year we could still see inflation. With inflation, you see a lot of market volatility. With market volatility, you may be nervous about your investments going up, going down, and what are your alternatives on steadying your income and everything else? There are fixed products out there that you should be considering. Now, we talked about CDs, and the best CD, and I'm still seeing an advertisement for 1% for 2 years. I saw it in Newsday. I saw it on my phone. They're advertising like crazy, 1% for 2 years. And we talked about what that does in a CD. Every year you're taxed on that money. And last week I went over the numbers, and I said, if you put that 5-year CD at 1%, you'd have to pay tax every year. And at the end of 5 years, considering, state and federal taxes of 25%, you'd have $104,000, and 104,750, I think is the number, after 5 years. But we have annuity rates that are climbing right now that are guaranteed rates over 3%. Some of them are as high as 5% for a year, and 4% they give you a bonus. And even at 3% for 5 years, the difference would be $116,000. You are not taxed on any of that money unless you take some of it out. We talked about liquidity as well. With a CD, if you break that CD, you have to pay a penalty. You lose some of your money. With a fixed annuity, they usually allow 10 or 15%, depending on the annuity that you pick, of money that you can withdraw if you need it for emergencies. So it has liquidity, it has safety of principal, and it has guarantees that you can't buy at a bank. If you are looking at your investments and your portfolio and you're concerned, or you have some investments sitting at a bank doing nothing, reach out to us at 631-647-4694. Let us show you how that we can maximize your funds. Another thing that we do is we do immediate annuities, which will pay you an income for as long as you live. You can't outlive that income. Now, with some of your money that you have fixed expenses or you have growing expenses, wouldn't it be nice to know that they're covered every month so you still can invest some of your money and do other things, but you want to get yourself to a place where everything works on automatic. And that's what we do with annuities. Now, when I was at that convention, we talked about a couple, and I've run across this many times. They were in their 50s, and they had 2 kids in college, and they had a son that was in high school, and their mom was 80 years old. She lived about a half hour away, and they noticed when they visited her mom's house that it was unkempt. And her mom always kept a clean house. Now, she was 80 years old. She's a widow. And they also noticed she started repeating things. And the other thing they noticed is as she was walking from room to room, she was holding on to chairs or tables. Very different than what they were used to. Now, they reached out. They have 2 siblings. And they reached out to their siblings. One sibling lives across the country. And they didn't think anything was wrong with mom. Another sibling says, oh, okay, I'll visit her. I mean, he lived an hour away. Well, all of a sudden, they have a dilemma because mom's husband did very well, took care of her, paid for the house. She's living on Social Security in the house and a small pension. So she's living comfortably. She has extra money sitting around, a couple $100,000, but she's 80 years old. But all of a sudden, she seems to be losing her faculties. Now, herein is the real problem. What assets does she use for her care? Does she have a long-term care policy? Does she not? So we went through this exercise, and she did buy a small little long-term care policy many, many years ago. It was good for $100 a day. But part of that long-term care policy that she purchased that a lot of people don't realize is something called care coordination, which is vital to every family. No charge. Within that policy, they have people in there that will assess the situation for you at no charge and start the claim process if necessary, if help is needed around that home. Now, a very important factor on a long-term care policy is that care coordination. I don't care if you have $100,000, $1 million, or $10 million. Having that care coordination is a big, big relief to anybody. I know in my situation, when my parents were failing, my father had a disintegrated disc in his back and his neck, and my mom had to take care of him. But my mom's car started to look like a trash can. With her new van, it was a wheelchair accessible van, had scratches and dents all along both sides. And I had to take away her driver's license and her keys. I said, you can't drive anymore. Now, all of a sudden, coming from a child to a parent, this is a very, very hard discussion to have. And other kids in your family may have denial. And part of long-term care planning for a parent, or for yourselves for that matter, let's say nobody lives near your parent, Who's going to take the ball and take care of mom? Who's going to take care of mom? Number one question. Number two question. If her mental faculties start to go, who's going to take care of the money? Who is watching the money? Because mom could be spending money frivolously, or she could be conned. She's in a very bad situation. These are things to consider. And when I come back, I'm going to be back in about a minute. We're going to go into some more details about this. You're listening to the Main Street Code for Financial Success. I am Neil Himmelstein. I can be reached at 631-647-4694, or you can visit me at my website at mainstreetplanninggroup.com. To the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. And before the break, we were talking about a family situation where some planning had to be done. So our couple who's in their 50s and have 3 kids and 2 in college noticed when they visited mom that mom was starting to forget things. Noticed that the house was unkempt. Noticed that mom wasn't like mom. She was leaning on things as she walked from room to room. And nobody lived near mom. Mom was always did it on her own. And now they need to go into planning mode to help mom. So we helped them quite a bit. And some of the planning mode we did is we looked at, they had a long-term care policy, which had a care coordination benefit. But the first thing we had to do is we had to have a family meeting with the 3 siblings. You know, part of having a plan, it's not just having policies, it's not just having investments, it's having to do with what if. Now, this couple had 3 kids, 2 in college, 1 in high school. They lived a half hour away from mom. Their other sibling lived all the way across the country, really couldn't do anything about it if she wanted to. And the sibling said, oh, we'd stop by and see mom. But all of a sudden, you're now in crisis mode. That 80-year-old mom, maybe she's driving. Maybe she's not driving. As I said before the break, I had to take my mom's driver's license away. That was really not a fun thing to do. All of a sudden, you lose your independence. That's like sticking a dagger in her heart. I mean, my mom was devastated. You know, but she was a danger to herself and other people. And as we get older, and as we need plans, not just insurance, not just investments, we need good plans. So now this family has a crisis because mom is starting to seed. So the first thing we suggested is have her assessed. She had a little long-term care policy, and we suggested, without any cost, start a claim process and get a care coordinator there to assess the situation and help coordinate and help ease that family's mind. Now, while we progressed, and then we went through her assets to protect them, maybe put them in annuities or maybe created some income flow to help pay for the long-term care, did some various things. But more importantly, the 3 siblings now understand what could happen and what's happening. And now is the time they really should be evaluating what are they doing, because at 50, you can plan and take care of a lot of things about where your assets go and how you're saving and how you're protecting them a lot easier than when you're 80 and now you're in crisis. So that was the next planning we did for these 50-year-olds and their siblings, because everybody needed a plan on how we're going to help mom and how we're going to help ourselves. Are we going to quit our jobs and run, or are we going to bring our mom into our house while we have other children in the house? Or is our sibling going to bring her into the house? Who's going to take, is mom going to be shuffled around? Or does she want to live in her own house comfortably with other things? These are all big decisions, and they involve mom as well, of course. So what is mom's wishes? Does she want to live with one of her children? Does she want to live on her own? This house is paid for. Do we need to do legal work? Does the house need to be put in a trust? All these things come up, but it's a lot easier to deal with all these things well beforehand so that there's a plan. When there's no plan, you run into crisis mode. And I have some friends right here on the radio station. They ran to Florida to take care of their mother recently. I had to put her in a nursing home, and I understand that. But all of a sudden, he's got responsibilities here. He's got to run and do that. And there's other people, all of us, have situations like this. So please discuss those situations with us. So we talked about that. We talked about North Carolina. We talked about fixed annuities and how they can help you. Now I want to talk about another subject. Basically, we've talked about this in the past, but your policies and your planning need to be reviewed. And I was listening to another program here on the station at night with a very good planner and good friend of mine who was talking about when to take Social Security and how that affects all of your other assets. If you wait to take your Social Security, let's say you're 60, and 66 is the full amount that you'll get up to age 70. But for every year you defer payments on Social Security, you get 8% more the following year. That's huge. 8% without touching it. Now, the downside is your life expectancy. But if you have a long life expectancy and you're very healthy, you may want to delay taking your payments, or you may want to take half of your spouse's payments if you're married. There's all these different considerations when you take Social Security. Many people think, as they're saving for retirement, they don't need insurance anymore. Life insurance. Well, I wanted it for my kids growing up. But what we found is that many of the people that purchase life insurance are well into their 60s and 70s, all the way up into their 80s. They're buying insurance. Why? The life insurance death benefit is tax-free. Yes, you can use that money for many other plans. You can even use it to fund your long-term care insurance. You can use it to fund your retirement. It's tax-free money. But many people with their investments have put all their eggs into 401ks. Now that was a great planning tool when you're saving for retirement, to put away in that 401k, to put it away in your IRA. But if that's all you have, all that money is taxable. So you want to develop tax-free buckets, taxable buckets, and non-tax buckets. But if that's all you have and you want to cash in your life insurance, that doesn't make sense. Sometimes you need to develop a spending plan, or some people call it budget. I call it spending plan. I hate to use the word budget, as to which assets to use. Whether to use your qualified, your 401k assets for income, or you're non-qualified, or maybe you have an annuity that's going to pay you a payment stream and pay your mortgage for the rest of your life. So there's all kinds of multiple options, and we encourage you to reach out to Main Street Planning Group, or reach out to me at 631-647-4694 to go over all of your options. And last but not least, life insurance policies are changing dramatically and have changed. We've had a number of companies that have left the market or gone out of business. They'll still pay the claims, but you want to know that somebody's in care of it. If you bought a Met policy from Metropolitan Life, and you bought an ING policy, or bought an Aviva policy, or many of these different companies, they're no longer selling new policies here in New York, you may or may not have something to convert to down the road, and you may or may not have a good service people to help you in time of claim. So we encourage you, anybody that's bought these policies within the last few years, reach out to us and review your policies. In addition, cash value policies or permanent policies, whether it's whole life or universal life, The dividends change every year. And most people will buy life insurance, they'll put it in their drawer, and they'll forget about it. These policies have to be reviewed because if the cash doesn't hold up, and later in life, whether it was a big interest rate decline, which we've had, or something else, later in life, they may ask you to pay more money to keep your policy, or you may lose your money, or it may go into loan status. Lots of things can happen. In addition, you have to keep checking the beneficiaries and make sure all that's up to date. We're here to help. You're listening to the Main Street Code for Financial Success. If you ever want to reach out to me, 631-647-4694. We've got some videos and other financial tools on our site at mainstreetplanninggroup.com. That's mainstreetplanninggroup.com. This is your host, Neil Himmelstein, and have a great, great weekend. Thank you.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.